There is something seriously wrong with the stock market. Last time something like this has happened, the US economy has collapsed. AI companies have been announcing recently multi-$100 billion investments. Nvidia is going to invest in OpenAI $100 billion. OpenAI is going to invest in Oracle $300 billion. SoftBank, OpenAI, and Oracle will invest in Stargate $500 billion. These three investments alone worth $900 billion. But if you pull out Nvidia's financial statements, you will find out that Nvidia has about $57 billion in cash and about $11 billion in net debt. So maximum that Nvidia can actually invest in any other company is about 5 to 10% after its debt. So that's a few $billion, $3 to $4 billion. If you pull out OpenAI's financial statements, you will see that the company is burning money and has no additional dollar to invest anywhere. If you pull out the Oracle's financial statements, the company has about $10 billion in cash and about $111 billion in net debt. So what exactly these three companies are planning to take $900 billion when all of them are simply filled with debt? But before we answer that question, let me tell you something about Microsoft. Microsoft has been one of the best performing stocks recently, but does it still make sense to buy it? The president, the CFO, and many other executives have been on a buying spree, showing that insiders are still bullish on the future of Microsoft. But what is interesting here is that I found all of this information on an app called Moomoo, the sponsor of today's video. It's one of the most powerful trading and investing platforms in the world, a platform that was designed by traders for traders, with features that truly stand out. It's backed by Futu Holdings, that is listed on the Nasdaq and trusted by 27 million users across the US, Canada, Australia, Singapore, Malaysia, and Japan. I have been using Moomoo to track where institutional investors have been placing their orders. This is Michael Burry's portfolio. These are the stocks that he has purchased, and these are the position that he has exited. The dashboard is so convenient that I can check any stock on the right side of the screen. The same features are available on the mobile app, and you can compare his portfolio to the S&P 500. It seems like the S&P 500 has been doing far better than Michael Burry's portfolio recently. There is $0 commissions on stocks, ETFs, and options, $0 contract fees for equity options, level 2 data, real-time option chains, and advanced type orders for those who are interested. So if you're ready to join me and 27 million other people who are using Moomoo, then scan the QR code on the screen or click the link below this video for a limited time offer. And as a thank you for trying them out, you can get up to $1,000 worth of Nvidia stocks as a bonus when you sign up and make a deposit using the link below. Nvidia recently announced multiple billion-dollar deals into multiple different companies. $100 billion into OpenAI, $2 billion into XAI, and $6.3 billion into CoreWeave. But because Nvidia does not have that much money to give any of those companies, Nvidia came out with a brilliant plan. The problem is that these companies either don't have that money to buy so many GPUs from Nvidia. So Nvidia came up with a brilliant plan. Nvidia will lease almost $100 billion worth of GPUs to OpenAI, and in exchange, Nvidia will take a share in OpenAI. Since the introduction of ChatGPT back in 2022, Nvidia has increased its prices multiple-fold. So most of the companies cannot possibly afford these GPUs. You need billions of dollars if you want to build the AI infrastructure. So Nvidia is actually making a lot of money, but many other AI companies are not. So Nvidia will lease $2 billion worth of GPUs to XAI, and Nvidia will take a cut in XAI. Nvidia will also provide $6.3 billion worth of its GPUs to CoreWeave, and CoreWeave is simply providing those GPUs to other businesses that need those GPUs to power their AI. Nvidia simply turned their GPUs into a capital that they can exchange for equity in many other AI companies. Oracle has borrowed tens of billions of dollars to invest in AI. So it is going to spend $40 billion buying NVIDIA's GPUs. And OpenAI will pay Oracle $300 billion to use its GPUs. Because OpenAI is not in a position to borrow that much money, and Oracle has a very great reputation. So Oracle is essentially borrowing money from investors, buying GPUs from NVIDIA, and then literally just loaning those GPUs, as you can say, to OpenAI. So you can clearly see that money isn't actually flowing between these companies. Those multi-$100 billion deals are not cash deals. Money isn't flowing from one company to another. These are simply NVIDIA's GPUs flowing from one company into another company. This is not a problem. Let them do what they want with that. The real problem is when we start valuing these companies based on the fact that real money has actually changed hands. If you look at all the private AI companies, you will see that they have insane valuations, even though that there isn't actually real money. OpenAI's valuation has crossed $500 billion, even though that the company is announcing an annual revenue of about $12 billion. You can see the insane valuation. xAI, Elon Musk's company, is valued at about $200 billion, while its annual revenue is $200 million. So essentially, the valuation is literally 1,000 times of its revenue. And the same thing that you can say about every single other AI company, which is what makes the entire situation even worse. What makes the situation even dire that these companies are paying their employees simply in stock compensation packages. If you look at who owns OpenAI, 25% of the company, or about $125 billion, is being owned by employees. Because OpenAI does not have that much cash. That much cash does not even exist in the AI sphere, which is why companies are simply paying off their employees in stock compensation packages. So you can see that most of these deals, most of that money, most of that capital has nothing to do with the real money, with the real cash, with the real earnings. It's simply either GPUs moving from NVIDIA to other companies, and other companies are simply being valued at insane valuations and are paying everyone else based on their stock compensation packages, which makes the valuations even more insane. The real question is, who is actually making money out of AI? Now, NVIDIA is making most of the money. The entire AI sphere or the industry is around NVIDIA. And if you look at the financial statements of the company, they did actually make hundreds of billions of dollars. But the problem is that NVIDIA has actually reached its full potential. Yes, there is far more demand for these GPUs, but these companies who demand these GPUs don't have the money to buy those GPUs. But if NVIDIA will stop selling these GPUs, its valuation is going to crash. So because the industry has reached its full potential, NVIDIA is simply leasing those GPUs to other companies in exchange for equity. The real company that's supposed to be making money out of AI is OpenAI, because OpenAI is providing the final product to the consumers. But if you look at OpenAI's financials, you will see that it is actually not doing that great. Over the first months of 2025, they have earned about $4.3 billion, while the company has spent $12 billion. So their total losses is about $8 billion. It's normal for startups to burn that much cash, and they usually burn billions of dollars before companies turn a profit. But what I want you to pay attention to, even after spending hundreds of billions of dollars into this industry, and the industry has reached its peak, these companies are far away from profitability. And if OpenAI cannot turn a profit, then you can be certain that not a single other AI company that delivers the final product to the consumer is not actually turning a profit anytime soon. And the industry is running out of time. OpenAI will allow verified adults to use ChatGPT to generate erotic content. You wouldn't do anything like that unless you're very desperate and you're trying to raise your revenue in any way possible. I'm not saying anything bad about OpenAI or AI in general. AI will potentially, in the long run, will change the world. But the problem is that if those valuations today will not be backed by real earnings, there is a problem. The stock market has been insanely growing fast since 2022, but at the same time, margin debt has also been growing tremendously. When the market is growing, investors often borrow money against their portfolio to maximize their profits. If the market has grown by 10% and you borrowed against your portfolio 2 to 1, then you can double literally your returns. Instead of making 10%, you are making 20%. So if there are reports that Nvidia or any other company that is going to grow by 20, 30 or 100%, you want to borrow against your portfolio to maximize your returns. But whenever the market is crushing, investors barely borrow any money. And if you look at the data, at the margin data of the market, you will see that even though that the valuations in the market right now are fake and no real money is being changed hands, investors are still borrowing money to maximize their returns. And the current margin debt has reached about $1.2 trillion. This is a new record. When valuations are fake, sooner or later the market is going to correct itself and it's going to fall to a level where it's going to match the real valuations. But if investors have over-leveraged positions, then they're going to suffer the most, because the moment the stock is going to go below a certain level where it's going to match the size of your portfolio, your broker is going to automatically exit your position and you will be forced to sell your entire portfolio. And that is the danger that the stock market is facing right now. Usually when there is enough liquidity in the market, that is not a problem, because brokers often borrow money from other financial institutions to back up their portfolio, so that their portfolios won't automatically exit their position just because the market corrected itself. But if you look at the liquidity in the market, you will see that liquidity has actually gone down dramatically over the last couple of years, or at least since 2023. And the Federal Reserve currently is still injecting some cash into the economy, because if it stopped doing that, it is going to completely collapse the entire market. But the Federal Reserve is not in a position to save the entire market. The Federal Reserve is not in a position to literally just inject as much cash as it did back in 2020 and 2021, just because those investors made really bad decisions. Because the market is so over-leveraged based on fake valuations in the market, as we have seen, and there is very little liquidity in the market, it creates the exact same dynamic that the market has been back in the year 2000, just before the dot-com bubble burst. And that is probably the biggest risk that the market is facing right now. That's it for today, guys. Don't forget to check the sponsor of today's video. The links will be in the description and in the pinned comments below. Thanks for watching, and I will see you in the next one.